Andrew, I'll just start with you. The retail sales number this morning for the U.S. was fantastic. Markets totally shrugged it off. Why weren't they more reassured that America is still doing okay?
Well, I think we're just going through a correction in the market, and what's fascinating is if you look back since this bull market started, every time we have these corrections, it takes about 2 months to work its way out, and I think we're coming to the tail end of this correction. The other thing that's going on is it's tax loss selling season, so all the areas that are down on the year, they're getting hit worse. But I think we're coming towards the end of this in the next week or so, and I think that's setting up for maybe a little bit of a Christmas rally into the end of the year.
Okay, Tom, we had the retail sales number this morning. We had the tweet from the president suggesting that China wants to make a deal. Why don't you think that the markets responded better to all of that?
Well, I'm going to agree with Andrew in a sense that I think there's a lot of tax loss selling trying to offset the cap gains distributions earlier in the year. If you look at the retail sales, strong numbers, but it's going to be really focused on the e-commerce sites. So, when we start really breaking down where the number of sources are, I think we do see some really strong consumer consumption, but in a select group of industries. But, the key is a year ago, we were talking about market probably overvalued, and then we had a fairly sharp correction earlier in the year, which recovered. I kind of think that's where we're at this time within the next couple of months. We have attractive valuations. There's so many positives about the market that we're in a perfect storm of bad news right now.
Andrew, you sound pretty positive about the markets, but what is there that you see that will be the catalyst for 2019? I mean, we set up 2018 with a period of, earnings are going to reach peak growth. We're going to have the benefits of the tax stimulus. We had all these positive tailwinds going into 2018, and 2018 turned out to be a bust for most investors across asset classes. So why does 2019 look better?
Yeah. So what's fascinating is when expectations of strong economic growth are high, the stock market actually doesn't do very well. It's when the expectations are low, the stock market actually does better. I think we're going through this process of we started with sky-high economic expectations at the beginning of this year, and we're in the process of coming down. And so I think I'm a little optimistic of bouncing the year, and I do think the market's going to get worried again about fourth quarter conference calls, but you have to be a little bit more optimistic because we've washed out a lot of very positive sentiment from the beginning of this year. Stock prices are flat to down, earnings are up. That should make stocks more attractive next year, not less, and sentiment is a lot lower. So it seems like the setup is the same as at the end of 2011, 2015, flat year, washout in sentiment. 2012, 2016 were better, but certainly first part of 2016 was a little rough. So this is a longer term 2019. Doesn't mean we can't have more weakness early next year.
Tom, you're nodding. It looked like you were agreeing with Andrew in terms of the optimism. But Andrew did mention something key, and that's the fourth quarter conference calls, which will start in January. I mean, do you think that we're going to get a trade deal with China between now and January? And I asked you that because what really roiled the markets was when we started getting these conference calls and companies started talking about higher input costs. Unless that abates for the fourth quarter calls, what's going to change in terms of the tenor of the outlook of corporations?
Well, I think it's a given. The fourth quarter calls will not have any abatement from whatever tariffs have been imposed. It's not going to have any abatement from any of the gridlocks we've had in some of the chains. It's going to be what is the mood that's set. I mean, we're driven on the emotions of the latest pronouncements that come through D.C.
Even though we shrugged off the one this morning?
Even though we shrugged off this morning. But, and I'll tell you right now, I think everything's priced for a perfect recession. And I don't see a recession in the cards. And I suspect that, what the fourth quarter numbers will tell us, earnings are trending down because of input costs or lack of supply. But I do think that they're going to look at consumption. Demand is still rising. Wage growth is rising. Employment is still stable. That's going to set the stage for I wouldn't say robust, but a strong enough economy next year to provide that underlying support for the market.
Yeah, even the current GDP quarter